Good morning, everybody. Mike Vaki, Princetontrader.com here for ntmarkets.com with your Wednesday morning pre-market webcast. Okay, daily chart of the ES. Globex high is 1914. We are on an upper band ride. 1, 2, 3, 4, going into 5 days if you include the holiday. So how does this work? Well, the bulls are not able to roll over the daily chart today unless they can break yesterday's low, which is way down at 1897. So they pretty much have to print 1896.75. It's not an undoable thing, but you're talking about essentially a 20-handle pullback off of the highs, which with what the bears have been able to do, for the last few days seems, a little unlikely. What I think is more likely to happen is that we get a smaller range day today, and we start to roll this thing over in the next 1 or 2 days. But, best case scenario, if we roll over, really is a test of middle band. You're starting to see the bulls get their footing. You're starting to see the kind of price action that we saw in 2013. So I still have some shorts. The shorts are hedged, have been hedged off with some longs that have done very well as we kind of wait for this thing to turn. The longs, you can pick off longs for 5, 6, 7 handles in a chunk if you're just a little bit patient, put it on and don't worry about it. I have not added to my shorts, and what I said this morning was, I have a ton of room to add, but adding all the way up is it's just a disastrous proposition, and so many traders do it, and I think a lot of traders add as they go, because they like to see that dollar cost average get higher because it makes them feel better, okay, while they're sitting there in their chair in a trade they're clearly early on. What I would rather do is just say, look, we're on a band ride. I'll see you guys when it turns. I'll add then. I'm not going to pay for the ride for 20 whatever handles. I would rather allocate that to when it can turn. And if we start to turn and have a couple of days down, will I add at that point into the weakness in order to close the gap and get into profit? Absolutely. That's the better way, in my opinion, to handle these kind of situations. And in the meantime, the long account is doing great. So the key today for the bears is to try to crack that 1897 area, which is pretty much a bridge too far. If they can get back below round number 1900, I would consider that a great victory for the bears. What the bulls want to do is when we get that morning dip this morning, is to just come on in and buy that dip and continue to squeeze and grind higher to new highs throughout the course of the day. As long as that continues to happen, the band ride continues to go. So if you're long, you're looking for the reaction on that dip. If you're flat this morning, the better percentage play is to buy that morning dip and to ride it out for the rest of the day. Worked yesterday, worked Friday, worked Thursday, and we're starting to get back into that kind of a mode, and it's going to work until it doesn't. At some point it will not work, and then we'll see a character change in the daily chart. But I think the ultimate character change for now is at least going to be a fairly shallow pullback. I was talking about moves down to the 200-day exponential moving average over the course of the summer last week. That's not looking very realistic at this point. And I think I greatly overestimated the bears' ability to get below the 50-day exponential moving average, and I kind of underestimated the bulls' ability to get that 2013 mojo back, and they've really found it the last few days. So we'll see how today goes. You've got your markers and the things to look for. The morning dip is going to be key. So that's all I've got. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. I will be back tomorrow morning with another webcast. Trade them well, everybody.